In the world of business, Nigerian stocks were down 1.3% on Friday, taking a hit from profit-taking actions on a couple of telecom and bank stocks that spurred the bourse's second biggest dive of the year. Heavy sell orders on Airtel Africa, the most capitalized stock on the exchange, and Zenith Bank as well as Fidelity Bank set the slide in motion in a trading session where volume jumped by 37% and turnover by 5%. The NGX 30, the index that tracks the top 50 companies on the exchange in terms of liquidity and market capitalization, dipped 0.1%, also on account of sell pressure on the capitalized telecom firm. The all-share index climbed down by 715.7 basis points to 49,629.4, while market capitalization dropped to 29.3 trillion naira. Nigerian stocks are up by 5% so far this year. And now joining me on News Central to further discuss this is Funmi Owoigbe, a Treasury Sales Market Analyst, TrustBanc Financial Group. Thank you so much, Funmi, for joining me.
Oh, it's an honor to be here again. I hope you can hear me.
I can hear you loud and clear. It's a pleasure to have you. Now, Funmi, can you tell us what stocks pushed the market into the negative zone on Friday?
Okay, so for last week, we saw that the local bourse had its first retreat through the beginning of the month. From the beginning of the month till now, we saw that it's been doing so well, but last week it was we had the negative side. The loss recorded on Friday, which was due to the sell pressure on Airtel Africa, which was about 6.02 negative, was sufficient enough to wipe out the cumulative gains of about 0.4 as at Thursday. And these made the all-share index sink by 1.32, and it brought the year-to-date to close at 5%, compared to 6% last month.
All right, for me now, we know that there is currently a cash crunch in Nigeria. Can we say that the scarcity of naira notes are impacting the equity market?
So in the equities market, settlement isn't made with cash. So the scarcity has little or no impact on trading activities at the local bourse.
Okay. And is the fixed income market still attracting the right attention?
Yeah, for the fixed income market, we saw a swift shift last week as rates climbed sharply on the back of scarce liquidity. The bond auction debit that was passed midweek, that was on Wednesday, it swallowed the available liquidity in the market. As a result of that, we saw sell-side activities, especially at the near end, which made rates much higher across the bond, in Treasury and the OMO markets.
Right. And what should we be expecting in general for this week?
For this week, we believe the Treasury auction scheduled for Wednesday will guide the activities of the week. But before then, there might be light sell-offs at the near end due to thin liquidity in the market, and it will take rates further north.
All right, Treasury Sales Market Analyst, TrustBanc Financial Group, Funmi Owoigbe, thank you so much for your time with us on the news.
Thank you also.